this next session of our trading program. So probably in this session we'll be talking about the support and resistance acting as liquidity in the market. All right. So how liquidity is being built around this concept of support and resistance. Now the very first basics on what it's all about. This concept is that is all the basic concept is that market trades either bullish or bearish. Now let's take in the case of bearish scenario. So market trades to the downsides and no longer form a series of lower lows, lower highs as clear as it ought to be. Instead, it's stuck in a range by forming some equal highs, as you can see here, equal highs and equal lows. So where we have our support, which is normally known in basic terms, and you have a resistance being an area where price finds it difficult to break, and support a low where price finds it difficult to break. Now when price must have stuck in this range and later on to which whatever direction it goes, that's where the break occurs. So if the break occurs to the downside, then we probably have a way we trade such scenarios. Now first thing first, you will have to understand is that in this case, in a bearish market case scenario, what you have to understand is that as market trades, should in case market stuck in a range, now you probably have what the price break to the downside. Therefore you should wait for what you should implement, or you should apply what they call AMD, the accumulation manipulation distribution um, 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 strategy. So which means that you probably what market accumulates, this is the accumulation, you probably have the manipulation to the upside, and you probably have what the distribution to the downside. It means that for you to for this to have for this to have occurred, it is as a result of certain factors. And as price breaks whatever direction, now this is how you definitely trade. So when you must have identify what the AMD, the accumulation phase, the manipulation phase, the distribution phase, you trade during what redistribution. You definitely trade what during redistribution, which means that which equally means that what you have to understand here is that when price is stuck in a range, you have the manipulation to the upside and price break to the opposite direction. And if you probably see this, you take a look at this and you probably have these highs being swept and price did what break here, means that you had the accumulation manipulation up here and you had the distribution to the downside. And as a result of that, you wait during this redistribution phase you before considering a trade. So during this redistribution phase, you wait for what you identify your point of interest and you wait for your lower time frame confirmation before considering a trade. Now in this is why this is the reason you ought to consider a confirmation here, is because there are some cases where price trades to the downside, have some sweep here, as well as it might not. All right, comes down here, break to the downside, and all the way reverse. Instead, you have that manipulation. You later on realize that you had that manipulation instead to the downside, whereas you were anticipating what a distribution and a redistribution next. Whereas that situation is what is it's a manipulative phase where price what, and in most cases this is a case where you have the market being extremely bearish, where the market has been trading for about 3 weeks, a month, and it is consistently bearish for throughout the month. In this case, you probably see this is the case where you probably see this accumulation and manipulation to the downside, and price does break to the upside. So you think it is a distribution, whereas it is not a distribution. So you have to understand this. So if you take a look at this, you probably see that we had this in this case scenario, it was clear. So the first thing first you have to understand is that when you have such, or when you have when you have such scenario, that is, you implement what, identify the accumulation, the manipulation, which is the one, and the distribution. So the distribution is always the direction to which market has broken the channel, the range. All right, and the distribution is to the opposite side. So here it definitely break to the downside, so the distribution is to the upside, and there must always be the manipulation. If there is no manipulation, then you should pay close attention to that, because in cases where there are no manipulation, right, this distribution, in cases where you often see the manipulation down here, which a lot of traders see as a break whereas it is manipulation. It's in the case where price attempt to go up and it doesn't what break this high here, the recent high on what the manipulation, the recent resistance on the manipulation, and instead price did what fail to reach there and does continue and break. So when it break, there are high probability does what it reverses back right up to the side, to the upside, and instead you wait for what you instead wait for a redistribution back inside this range and at a point of interest before continuing a trade forward. So these are cases. But in cases where you see your recent high or resistance has been taken out and you probably have the distribution, then that is a manipulation. That is what is known as a manipulation. This recent high, so you probably see we had the first, second, third, and this was the level where we had what during this fourth, this was the recent high here, and price it what led to the distribution after taking out this high up here. So you probably, it might still be a candle closure above here, but you need to identify what the accumulation, manipulation, and distribution before moving on to the redistribution. So you probably see that if even price had done what closed above this high here, moved to the upside just a little bit, then you wouldn't have what then moved to the upside, then you would have been considering this as what as a manipulation here, and you wait for the price to come back and a reversal back up to the side, to the upside. So these are cases where you trade this accumulation in a bearish market scenario in this case. So this is what we call redistribution after you must have had your distribution. This is a redistribution when price goes back into the trend and does what mitigate a point of interest before you consider a trade moving to the downside, right? So let's move forward. Now this is in the case we have, this is a live example of what I've been explaining. Now in this case you probably see the market has been trending down and you had the market stuck in a range. So in this range you probably see you probably had this resistance. You have first, second, third. First you have it here, this is the first, the second, the third, fourth, fifth, sixth, and you probably have the eighth touch right here. So you probably have this resistance, a significant resistance right here, and the support you probably have the first one, second, and you had this third. And you probably see that for the market to have broken this, it had to grab this this touch here, this recent high right here, and move to the downside. And as such, you had this resistance, this third support, this third support attempts to hold onto this level. But price didn't respect that. So the pressure, the downward pressure exceeded the buyers, and as such we had the market as a result of factors influencing this movement. So we had these significant factors. Now bear with me that the market has been trending stuck in a range, and before this range you probably see that we had significant price movement, and as a result of this you probably this is being influenced by a fundamental report, which means that the market was stuck as a result of kind of stability, or market waiting for or market investors waiting for a catalyst to continue grinding the way, or to definitely reverse the market. So probably right here you see that as price did mitigate the third, it does it tried to move to the upside. This means that a lot of support traders are doing are buying here, because here they attempt to buy, so they actually bought here, and it reaches here, they took profit, so took profit, and they actually buying, whereas not knowing that this fundamental factor being influenced, this fundamental factor had to influence the market to push down to the downside and move on. Now take a look at this support right here. A lot of support and resistance traders, when they always because the reason, let me move forward, let me move here. So the reason I recommended this, I'm sorry about this. Oh my gosh, what the heck? Definitely gonna continue here, man. Fuck, I'm not gonna consider this.